How does marriage affect FAFSA? Have you ever wondered how getting married might change your financial aid situation for college? Let's break it down in a way that makes sense. When you fill out the free application for federal student aid, known as FAFSA, your marital status plays a big role in determining your eligibility for financial aid. First, let's talk about dependency status. This is how FAFSA decides whose financial information you need to report. If you are considered a dependent student, you must include your parents' income and assets. But once you get married, things shift. You typically become an independent student, which means you no longer need to report your parents' financial information. Instead, you will report your own income and that of your spouse. Now, let's get into how marriage affects the calculations on your FAFSA. Once you are married, you must include your spouse's income on your application. This combined household income is used to calculate your student aid index, which is the number that determines how much federal aid you can receive. If your spouse has a high income, this could increase your student aid index, which might reduce your eligibility for need-based aid like Pell Grants or subsidized loans. On the flip side, if your spouse has a lower income, your student aid index may decrease, potentially increasing your eligibility for aid. Timing is also important. FAFSA uses income information from the prior year. So, if you get married after the tax year used for your FAFSA, your spouse's income won't be included until the next application cycle. This could impact your financial aid for that year, so planning ahead is key. Now, let's consider how banks and credit unions fit into this picture. If your marriage affects your eligibility for grants or scholarships, you might need to rely more on student loans. Many banks and credit unions offer private student loans that can help fill the gap if federal aid is reduced. Additionally, financial institutions can assist students and families in planning for college costs. They can explain how changes in marital status affect aid and offer products like education, savings accounts, or personal loans. They can also advise you on the timing of marriage in relation to FAFSA applications, especially if maximizing federal aid is a priority for you. To sum it up, marriage changes your status to an independent student for FAFSA purposes. You will need to include your spouse's income, which can either increase or decrease your eligibility for federal student aid. Understanding these changes can help you make informed decisions about marriage and financing your college education.